and welcome to Finextra. I'm Hannah Wallace and we're here at EBA Day 2018 in Munich. Joining me now is Thomas of Finextra, and we're going to be discussing the potential end of credit cards. Thomas, thank you very much for taking the time to speak with us today.
Thank you, Hannah. I appreciate it.
Firstly, could you tell me what makes open banking APIs and real-time payments more attractive to banks and merchants compared to credit cards?
Thanks, Hannah. Interesting question. So if we were to look ahead a couple of years, I think, so if there is an anonymous distribution of the ability to have instant payments for each of the consumers, as well as all the APIs are in place, which we all wish for, now with PSD2 in place, then there would be the chance that TPPs, third-party payment providers, would be able to provide each merchant with the capability of originating payments. Instead of accepting payments, the merchant could originate payments with instant payments that would immediately come to the merchant's account, which would be a phenomenal improvement compared to a credit card, where the inflow of money would take a month and you don't know if it's going to pull back. And it should be cheaper because it is relying on the existing banking infrastructure instead of the credit card networks. And hence for the merchants that's quite attractive, as well as for the banks it's attractive because they bypass the credit card while relying on their infrastructure. Now
you've touched on it already, but what are the benefits?
So the benefits for the merchants: get the money quickly and undisputable. So the big benefit of instant payments is the unrevocability of the transaction. So as soon as it's initiated, the merchant can be sure that he'll get the money. As I said, it should be cheaper because it's just the merchant, the TPP and the bank, and not a four-party or five-party system as we have it in the credit card system. So that is the benefit for the merchant. And for the banks, they make better use of their infrastructure and not get disintermediated by the credit card companies or by anybody else. So they can make better use, which is the purpose of PSD2, of their existing and valuable infrastructure as there are accounts and payment systems.
And of course, this is not without its challenges. What would you say are the obstacles ahead?
Well, I've mentioned initially two obstacles. That is, by when will we have instant payments available for all the banking consumers and customers? And by when will there be an API infrastructure that is easy to be used? Because this requires a broad acceptance of both instant payments and APIs across Europe to make it attractive for the larger merchants. So there's a time gap. I think it will evolve because of the attractiveness. And the other thing is, it needs to be attractive for the consumer as well, which there might be some obstacles because the irrevocability of the instant payment is probably a disadvantage for the consumer, because with a credit card he has 4 or 6 weeks to dispute anything. With the instant payment, the money is gone, he can't do anything about it. So there needs to be an additional incentive for the consumer to really adopt that payment.
Thomas, thank you so much for your insights.
Thank you, Hannah. I appreciate it.
And thank you for watching.